You guys may take it away. Cindy and Andrew can definitely introduce yourselves better and the Ying Yang.
Nice. Cindy, do you want to go ahead and kick us off, or do you want me to start the intro?
I always let you start.
All right. So first and foremost, we are Ying Yang Asset Management. We are an education company that wants to make a change in asset management. So for those of you who have been a part of multifamily investing, operating, or not just as an investor, you realize and understand the importance of asset management, hence the reason why you're here today. So asset management is something it lives in us. We breathe it. It's a funny story how we actually met, but we met through Chick-fil-A. That's a story that if you haven't seen it, we're on a podcast we talk about it. Two very hungry investors, both physically hungry as well as just wanting to learn and network. We met at a separate event, a third-party event, and we actually just became friends. So we became friends talking about Cindy is Cindy Tam Harding, and I am Andrew Suarez. If you want to know what Tam means, you're going to have to ask her, and she will tell you. But she has tons and tons and tons of experience. I'm going to let her talk a little bit more about her background, her experience, and then a little bit about me. I am a property manager here in Southern California. All I know is multifamily property management. I've done it for so many years, 10 plus. This will be my 16th actually. So I live it, I eat it, I breathe it. Only because it's not bad by any means, but only because when I got married, my wife was like, "Hey, you're working all these hours," and I had 500 plus units. So I was just living there at the apartments, wherever I managed Southern California. So it was like, okay, I realize now there's more to just running big, large properties. I'm happily married. I have 5 beautiful daughters. I take them to school, I pick them up. So, and that now that I own my own company, it gives me that flexibility to do that. Otherwise, I'd be at my job Monday through Friday, sometimes 7 a.m. till 7 p.m., 8 p.m., because there's so much going on when it comes to on-site. So I'm very happy that I've transitioned and now I own my own property management company, which is called Elite Property Management. And yeah, so Cindy and we started this company almost 2 years ago.
2 years ago.
2022. And we love talking asset management. We love the relationships that we build with asset management. And so I will stop there and let Cindy talk about her background, her experience, and anything else she wants to add on to how we started Ying Yang.
Thank you, Andrew. I do have a little bit of a scratchy voice today. I'm not a smoker, but it definitely sounds like I am one. So TAM stands for the asset manager, which is a lot the way I'm known on social media. So I've been doing asset management for 5 years, but prior to that, I was an accountant, had my own practice for 25 years, and I specialized in small businesses. And if you think about it, an apartment complex is its own small business. It has its own income, its own expenses. Everything that you would have in a small business is really what you have in a complex. And so it was a very easy segue for me to go from, I sold my accounting practice and have been doing this full time for 5 years. I absolutely love asset management. There's something in me that loves the fulfillment of the business plan. So basically, when I look at a property, I like to look at it in the beginning stages. When they're underwriting it, I like to work with the underwriter, help them come up with ideas for income, ways that we can cut the expenses. And then once we purchase the property, the asset manager is the one that actually executes the business plan. The underwriters, capital raisers, broker, investors, all the investor relations, they go find another deal. But the asset manager stays with the deal typically until it's sold. Right now, I have 9 properties that I manage, and they're all very different, which some people could think would be hard. And I guess it's a little bit challenging, but I really like it. And I like that I'm able to work with different property management companies. They all have different styles, different ways they do things. But because I am involved in the properties, I'm able to bring that across to each other, which is very interesting. So what is working at one property, if we're getting great success, I might try it at another property. So I just love it. I do it full time. This is my full-time job. I do have a staff, and we're looking to grow as far as high caliber asset management. That is my asset management company, and I do that either through GP or through third-party vendor. And part of how we came to create Yin Yang Asset Management is there are very little education courses on asset management. 5 years ago, you could buy a property and just kind of let it run its course through the property manager, sell it, and everyone made a lot of money. And that just is not the way it is today. Today, you have to work with the property management. You have to make sure they're hitting their goals. And our big stress is that we want to level up all the asset managers. We don't want it to be someone that's like, oh, I got the short end of the stick, I'll be the asset manager. Or I don't know how to underwrite and I don't want to talk to people about money, so I'll be the asset manager. We don't want those kind of asset managers. You don't want someone like that running your property. And that is why Andrew and I, we talked for at least 6 months before we formed our education program. And it is designed to help someone who really doesn't have a background in accounting, who has never done asset management before, but it's everything that you would need to know for your first year. We try to help you avoid those pitfalls. We give you timelines that you're going to need to meet. And our class is actually two-part. The first part is asset management. And it's literally, we teach you how to build out your agenda based on the reports from the property management, how to use your unit tracker, how to create a scorecard so you can see what your KPIs are. But the second part is leadership. And that is what Andrew teaches. And he is certified. And he helps people understand that we can't just dictate to the property management, this is what you're going to do. It doesn't work that way. That's not how humans work. And so he really helps bridge the gap for the asset manager to be able to talk with the property management and to talk with vice presidents of property management companies, to talk with GPs, because that's what we do. We're the liaison between the owners, and sometimes we are an owner, we're part of that ownership, and the property management. So it's a 12-week course. We absolutely love it. We support our students afterwards. We have an alumni group, which is absolutely amazing because we get to watch their progress. We have so many success stories from our program where people have been able to take the class and go on to be asset managers. So I absolutely love it. But I'll let Andrew add on to that. The one thing after Andrew talks, I do want to just talk a little bit about our philosophy. Is there anything you want to add, Andrew, before I start on that?
No, not really. I'm just eager to actually learn a little bit about the people who've woken up this early to say, hey, I want to be here and see how we can bring value to you. So I've written some things that I want to talk about, but more importantly, let's keep it fluid. If there's something you want to talk about and I don't have it written down, I'd rather give the value to you who've woken up this early. So Kim, do you want to add anything before as well? You're good? I don't want to take over the whole meeting, this part.
No, I do want to say I can hear now my computer is working again. So I'm like, oh, I just feel so relieved. I'm glad everyone picked the rooms they wanted to be in here, because I really did want to be in this room. Like, I think asset management should be its own movement. So I'm very passionate about supporting these guys. and very passionate about, like, please ask questions if you don't know, if you're new, if you're not new, if maybe they're doing something that you're not, maybe they have resources that they've built and made that you're not. And hopefully you guys can share that too, maybe some of the things that you've put together. I know there's a course, but that'll help. And then, yeah, that's really, I just really want to lift up people doing asset management. And I know you guys can't do all the properties, so I think that's a good reason why you put this curriculum together, is to help people further their business, which you guys have helped me for sure. And so that's all I want to add. A little personal testimony and definitely all the support.
Appreciate that. So yeah, going over what Cindy had mentioned, yes, there is absolutely a need for it, hence the reason why we've created this. So if you want to get more information, by all means, you can ask us. How do we find out more information? We do have a website. Literally, it's our name, just www.yingyangassetmanagement.com. I will say, if you want to learn about asset management, but maybe you're not necessarily like trying to take a 12-week course, we have free resources I just want to mention right now. So you can absolutely go to our Facebook group. We have a Facebook page, which is our business page. We have a Facebook group, but I would say we're trying to shift everything, transparency. We're trying to shift everything to our Facebook business page. So, for example, you can just come on Mondays at 4 p.m. Pacific Standard Time or Daylight Time, and we're just talking about all things asset management, a day in the life of an asset manager. What's going on in today's market? We're going to talk about things like properties failing. We talk about things like, why is there such thing as a capital call? How do we prevent capital calls? What do we do to be proactive versus reactive? I'm a big advocate. We like to play chess. If you're playing checkers, you're already behind, right? Everyone's talking about occupancy, but today I want to talk about something different. I want to talk about projected occupancy. If you don't know what that is, that's okay. I'm going to go over that. But there's things like that we need to be looking. We always have to be forward thinking in asset management, because if you're thinking of today, you're already reactionary and you're already behind the ball. So in good asset management, great asset management, you have to be forward thinking. Something else that I wanted to talk about today is obviously what Cindy tapped into already, is leadership. Leadership is something that's not talked about in asset management, and Kim's taken the class, so she knows, but it is, now that she's taken the class, it is 100% part of asset management. And if you don't think it is, trust me, I'm going to make sure you understand why it is so important. Because at the end of the day, we're working with people. I don't want to say dealing with people. That's the wrong word. We're working and partnering with people, because we're not on, I wasn't on site. But we as asset managers, you as asset managers, are not going to be on site every single day. So you have to lead, you have to motivate, you have to encourage, you have to empathize. We're going to use these specific words because it is so important in asset management to be a great leader. Otherwise, they're used to slumlords, guys. Like, we're taking over properties that are not doing well most of the time. We're the traditional takeovers with a value add, right? People know what value add means. So they're used to owners that are they're just like, yeah, you know what? As long as we're getting a little bit of cash flow, this was my great grandpa's, right? And we just put everything, all of our accountings on a Word document, right? You've gotten some of these underwriters, you've gotten these numbers on a Word document. Like, what the heck? This is a business. This is like my livelihood. So we treat this as a business, but we want to make sure, I have my notes here, we want to make sure that they have market knowledge. They want to ensure we're leading them and encouraging them and finding out what's their motivation, guys, right? Motivation could be multiple things. It could be intrinsic motivation. It could be extrinsic motivation. I don't know, Anthony. I know, Anthony, I met you. I believe this is the same Anthony. I met you in Florida, I believe, at an event. But I need to know who Anthony is. What makes Anthony tick, right? Is it his family? Is it just Jerry Maguire? I say, show me the money. Is that a tool that he used? We don't know, right? There's different things. So there's a lot to cover today. I know I have some notes. I want to talk about some things as well, but unless Cindy stops me, what I want to do is understand where you guys are in your journey, so that way we can better understand who you are and speak to what's important to you. We could talk about asset management. We obviously teach a course. We could talk to you for 12 weeks and more, and we have a day in the life, and we have our podcast, but If you don't mind, Kimberly, I'm just going to pick on a couple of people. I want to just know briefly what their experience level is. And I do this out of respect of your time because you're here early. If you guys are brand new, never done asset management, and just kind of want to dip your toe in the water, great. We can have that conversation to where it's at that level. If you guys have 1,000 units and you guys have been doing this for 10 years, then Cindy and I need to step up our game and talk to you at that level. And if it's something a little bit of a hybrid, then we're going to touch base on both parts. Does that sound good to everybody? Okay, awesome. So let's go with I'm just gonna say this respectfully. Mr. Chen. Mr. Chen, I see you pop up. Can you tell me a little bit about number one, who you are, where you're from, and what is your experience level with asset management? Or if you don't have any, say, why did you come into this particular breakout room?
Okay, great. Yes, I'm Chen Chu. I am from Taiwan. I actually study bioengineering in University of California, San Diego. And after I get my degrees, I moved to Johns Hopkins to do neuroscience studies. So I'm actually working as a researcher in Johns Hopkins Hospital. However, it's like I kind of can't project myself like doing this work, like keep doing like surgeries on animal for long hours, like for long term. So like I kind of attend the multifamily mindset events hosted in DC area, I think two weeks ago. And this is where I met the DJ. I think it's Kim's husband. Okay, yeah. And so DJs like just text me like about this event. I think that it's like it should be very helpful for me for my growth. And I have to honestly say that I have zero experience in multifamily. I think that attending the multifamily mindset is the first event that I get entered into this field. And I think in the event I learned a lot, like how multifamilies is a teamwork, and you need underwriter, you need lawyers, like, and but in the event they kind of like didn't they just touch base about keeping telling about how to management the asset they acquire. I think like probably they just take it as granted. They just like delegate it to asset management team. I think that and I think that's what you are doing, I guess. If I'm wrong, just correct
Yeah,
me.
no, we take yeah, exactly. We take it to the next level, but keep going. I love it. I'm writing these notes.
Yeah, so I kind of like try to just to expand my knowledge about all assets, because that here I think like nobody talk big about the asset management, so I believe there is still a lot of stuff under the hood. Um, so I'm just like trying to like attend like these like events like monthly to to expand my knowledge. And I also but myself, I'm just like start um getting in my like financial literacy, or like how the multifamily business work, by starting the program the also another educational program from multifamily mindsets. And I think like it's also a 4-week program that I think I'm based on schedule. I should finish the week 2 by the end of this week. Yeah. And but I'm still in a very early stage, because at week 1 is like learning your intrinsic motivation. Week 2 is like start to investigate the markets, like what is the emerging market that I want to target. Yeah.
Yep,
So
I
I
remember
haven't
that.
like go to the detail yet. I haven't go to like how to do the underwriting, how to do the asset management. So I think I attend this event. It's kind of pushed me to like jump to the later parts of the education program. Yeah.
You know what I love about your story, Mr. Chen, is that I see, like a lot of us here, I can say I feel like I know Trevor because I see him always. He's like, he must have a social media manager because I always see him on social media. He's just really good.
I do everything myself.
He is really good. He is
I'm
the
the
social
agent
media
that
manager.
looks at
Green Tyler?
the graphics.
Yeah, if you're not
Oh,
following him, Mr. Chen, please follow him. He has a
okay.
lot of wealth of knowledge. Um, but I see a lot of our paths, like our journeys, Cindy's, Kim's, Trevor's, we were all exactly where you were. Like
Oh,
literally, all exactly where you
how? Sorry, I
learning
didn't
from
get it.
day one at
Mm-hmm.
one point, and then look at all these people that are surrounded around you, Anthony as well. They just stuck with it. So my advice to you is just stick with it, bud. Things are gonna get rough. You may hit the lotto. People do, sure. 1 in a million hit the lotto and get a property, a deal really quick. And then there's other people who it takes longer. So just stick with it, bud. Stick with it. Keep doing what you're doing. When there may be a day, maybe it's probability is high where you're like, oh, I don't know if this is working. I don't know how it's, if it's this is what I'm supposed to be doing. Just keep going, man. Just keep going, right? If you
Yeah.
really want this bad enough and you really want to be successful, just keep going. I love your story. And I just want to see your success, see you have success.
Okay, thank you. May I ask a very naive question? Do you think like the asset management turned out to be like a full-time job for you? Like it need to like something that you need to commit 40 hours per week?
I'm going to let Cindy answer that because she is better equipped to answer that question.
Oh, okay. Sorry, I cannot hear you.
In the beginning, it's not full-time. If you just have one property, it would just take maybe 2 or 3 hours a week. I have 9 properties, so I do it full-time, but that's
Mm,
because I have lots of properties and am acquiring more properties. So,
wow,
but for your first one, for sure, you can definitely keep your W-2 and still do asset management.
I see. Okay, thank you.
Mhm. Yeah.
Thank you. Thank you. All right. Next up, Trevor, the man, the myth, the legend. Let's have you come on. Price is right. Come on down.
Yeah. So for me, I'm just looking to see if you're going to offer some, because the whole world has changed, right? So I had some properties, we were doing great. And then all of a sudden, I'm going to be honest, it felt like the bottom just fell out and we don't know why, right? So I had a property, we bought a distressed property, we fixed it up, we renovated, we made it a wonderful place to live. We were chugging along, it was great. And then literally for a 75 unit for 6 months in a row, 3 evictions a month or skips. And it just destroyed, and we went to cash flow negative. And so again, San Antonio's occupancy dropped a lot.
Yeah.
A lot of overbuild there. And I have another property in Round Rock. Now we did the opposite mistake there. So we got greedy and we started really bumping rents because we were getting it. And we got a little too greedy on renewals. And the same thing, we went from mid 90s to low 80s in occupancy. Hard lesson because we bumped them too quick. But so I'm looking for nuggets like how to adapt kind of to the changing market. And then other properties that I'm a GP on, I'm not involved in the asset management side other than I kind of watch it from afar and make comments and visit one other property in San Antonio just because I'm there. So, and I'll be honest, I was super fascinated with asset management, thought I would be really good at it, but I'm good at the human side, not so good on the number side.
Oh, we can help you.
So,
Yeah.
and then just back sort of overall my story. So I started out as a passive investor 6 years ago. LP in 20 syndications, 8 full cycle, and a GP on 12 now. 1, I really don't do anything with. 2, I am on the asset management team. And 9, I'm not part of the asset management team, part of the investor relations team. So I've been a busy boy in 6 years.
Yes, you have.
Great. Thank you so much, Trevor. So
And
if
I
I
have some
understood you,
passive investment that just totally crapped it this last year too. So 2 total loss of my capital. One from not enough insurance, if you can imagine, and one from just the whole everything that could go wrong, that is going wrong, went wrong, right? Only had 18-month cap rate, not enough reserves, 80% loan to value leverage, turned a C-class property into a D. and lost all our money.
Wow. So sorry to hear that.
Not
That's not fun.
that you think you can always make money, right? But it's
Yeah. No, I talked to my business partner when I was just visiting last month. Yeah, it's the market is definitely changing, and she nailed it when she said before you could just kind of let go and say, hey, it's running, it's doing its thing. The market was great. You're always seeing rent increases. But now you really need to like think outside of the box, and you really need to be thinking forward thinking, like in the future, what's going on. So hence the reason why I wanted to talk about everybody talks about occupancy, but I don't know if anybody's talking about projected occupancy. Maybe not enough. Maybe not enough. But if I understood you, so the distressed properties is really trying to get those nuggets to figure out how to adapt in those worst of case scenarios.
yeah.
Good. All right. Jay, I see a name, but I don't know if you're able to hop on. Can you hear us, Jay? Okay, maybe not. We got a ghost in the house. Anthony, are you available? Do you want to talk a little bit about your experience and what you're looking to grab out of today's networking event special? 3, 2, 1. All right, we keep moving on. So, we have both. Like I said, right? I said we have a hybrid. So we're gonna do a little bit of high. We're gonna do a little bit of entry level, so we can have everyone understand and get something out of this. Cindy, do you want to add anything? Do you want to start us off, or
Well,
what came up to your mind?
yeah, I do. I want to talk about our philosophy of asset management because I think that kind of applies to whether you're brand new or if you're like Trevor, where you're kind of scratching your head. And so, how we look at asset management is a three-legged stool. So, the first leg is we want our complex to be an economic driver in the community. So, what does that mean? What that means is that anytime that we can hire people that are local, we do that. Most of our properties are in tertiary markets. So we don't, it's not a huge city. And so we're trying to hire local people. When we do, so that we're putting money back into the economy. So our landscapers, our plumbers, people that we contract with, we try to use local. The second leg of the stool is community events. And that also does play into the economy as well, because, for example, in May, that's when the pools open at the complex, we do a big barbecue just to kind of let all the residents know that the pool is now officially open. And it's that same time of year that we have high school graduates. And so we go to the local bakery and we buy a big sheet cake and say, congratulations, graduates, with the different colors of the different schools. And we just honor those students, because what we're trying to do with these community events is we want to go from a complex that we purchased to a community. So twice a month, we have events. We always have an event when they pay on time. So we're talking the first couple of days of the month, and it's very, very simple and very inexpensive. So what we'll do, for example, 1 month they gave out paydays, little candy bars. It was called Payday and Pay. And as long as they paid their rent on time, they would come by the leasing office and they would, bring their kids and everybody would get a candy bar. We've done pizza and pay, popcorn and pay, anything that starts with a P is basically, we've done popsicles and pay. And what we're trying to do is we're trying to shift the notion that when you go to the leasing office, it's like going to the principal's office, like you are somehow in trouble. You only go there when you go to do complain about maintenance, or you only go there if you can't pay your rent. We don't want that. We want it to be a community. We want them to come in, excuse me, and talk to the on-sites, and just so that our on-sites know our residents by name. They know their children. The kids know they can go in and grab a treat. So we're trying really hard to create that sense of community. And then we always have an event, whether it's a barbecue or if it's we do breakfast on the go. One of my properties, I have 4 in the same town. We did a big backpack drive. So we went on Amazon Prime. It was in July, and we bought backpacks, and then we bought supplies that they would need. And we had this day where all the residents came in. The kids got to pick their backpack. They got to, get everything that they needed in it. And so we try to do those things that are going to create from complex to community. And then the third leg of the stool is retention. And this is where you want to make sure that people will stay. Because if they love where they live, they're not going to move. So we do have a rent increase. I mean, everyone does on renewal. And different properties have different amounts, kind of depending on what the business plan is. But we always give them an incentive to stay. So we might put in a ceiling fan in the master bedroom, or we might give them a gooseneck faucet for the kitchen. So what we're always trying to do is create that sense of community. And Andrew had mentioned that we do a lot of free resources for you. So in October, we're teaching a class that's the top 10 KPIs that you need to watch for. It's a free class. You can register for it on our website. And then in the first part of November, we're teaching a class that is complex to community, where we're going to dig into this 3-legged stool and really what can you do to create this sense of community, because that's where people are going to stay. We don't want evictions. We don't want people to pay late. We want people to be proud of where they live and love where they live. That's my pitch.
Love that. Love that. Thank you, Cindy. What I wanted to dive in a little bit today was I'm going to talk to a couple of things from Trevor. And Trevor, if you don't mind, I'm going to ask some questions because obviously I was not on these asset management calls. So I think it's better to understand. But I'm gonna kind of go over a couple of things first, and then I'll be asking some questions. And don't worry, Chen, I'll keep it I try to communicate to where everyone's going to understand. So even though you're just starting, I want you to take some notes because I'm sure that you will be able to use that in the future. So one of the things I want to talk about is when we talk about KPIs, Cindy just talked about KPIs. We're always talking about occupancy, right? So if you don't know what that means, it's just how many heads are in beds, right? What's the occupancy level? Occupancy level means, let's just use simple math. If I have 100 units and let's say there's 90 living there, because I heard Trevor say he's about 90%, or let's say mid 90s. What he's telling me, what I'm understanding is he has about 90 to 95 units that are paying rent. They're physically there out of 100. So that's what he means by mid 90s occupancy. Something that I don't hear enough on the asset management calls would be, what is our projected occupancy? And that's where we're playing chess and not checkers. So projected occupancy, what that means is there's a lot of companies that use different softwares, but one is very common. It's called OneSite. So in OneSite, they have predetermined reports. So in your meetings, one of the reports I always ran is what it's called a projected occupancy, 8-week projected occupancy, 8 weeks, AKA 2 months, right? So it will tell you where your occupancy is going over the next 2 months. So I would run this every time because I want to know where, okay, yeah, we're sitting pretty at 90, 95%. But as the example Trevor mentioned, it started to go down, right? So if you see it in the future, like what could you do? Think about this. What could you do? What action plans could you put in place when you know 2 months in advance what your property is going to be doing? So we used to use this a lot because we were like, yeah, we're sitting great right now. But over these next weeks, if we don't get any leases, if we're not filling in those, he used an example, evictions or skips, we're going to be sitting at 89%. So I think that's step number one, is identifying the red flag. And that's a red flag, is knowing like, hey, we're sitting at 95, but we have all these NTVs, which means notice to vacates. People are telling us that they're leaving. So what are we, and then that's, as the asset manager and the leadership part of it, you have to ask your PMs, like, what's the action plans to make sure we overcome this, right? So that's number one. Number two is the renewal conversation. Exactly that. Having these conversations ahead of time, as far as you can. If I know Kim I make my calls, just so you guys can write this down. It's not proprietary, but I would always start our renewal talks, like, I'm already thinking 90 days in advance. Okay. The reason why is because you need to start thinking, like, what is the process? What's going to get them to make sure that they are going to renew, right? And actually, I talk about this in class. The renewal process starts day one for move-in. Think about, why would I say that? Why does the renewal process start at day one at move-in? It's because, guess what? The renewals, yes, we're going to be sending to them 65, 70 days in advance, because sometimes if you're doing an increase in certain states, you have to give them 60-day notice, right? That's my property management side thinking. But the reason why we talk about renewal start from move-in is because if Kim was my resident, and they have a great move-in, but I ghost them, right? I don't talk to them. I don't do any resident relations. I don't send them a birthday card. I don't ask them how their kids are. They're not welcome in the office. Do you think she's going to be really motivated to want to renew later? And guess what? We just gave them that 1%, or not 1%, 2%, 3% rent increase. She's going to be like, well, trust me, what's changed, Andrew? Nothing's changed. Like, if anything, my carpet looks worse and my paint looks bad, and you guys are always on my butt about stuff. Like, the property looks horrible. Why would she be enticed to renew? So the renewal process, you need to be having these conversations that it starts from day one on move-in. And we're changing that complex to community right off the bat, right? So the renewal conversation, it's not talked about enough, but it starts from day one. And then I like to say, you got to create these check-in points. Like Cindy, I love the fact that she does it's the candy and pay, but what's it called? It's
like pizza and pay,
pizza and pay.
popcorn and pay, any P and pay.
Yes, we are responsible to make sure they have engagement with us. Because if we don't do anything, the only people who are going to engage with them is probably the maintenance team. So make sure you're putting things into place. You underwriters, if you're underwriting, what does your underwriting budget look like to make sure you're doing stuff, to make sure that you are putting things in? And then also, how often is the asset manager visiting the property? Like, ownership changes things. Like, when I had my owners come in to the property, it made a huge difference. And if you're just saying, oh, we'll get to it, that's not an action plan. You're hoping and wishing, you're crossing your fingers, holding your breath, saying, yeah, we'll get to it. That's not an action plan. An action plan is saying, hey, once a year on takeover, anniversary, whatever that may be, we're going to go visit the property. Because guess what? As the PM, I'm talking to you as a PM. I love it when the owners come in, and especially when they're like happy to see us and they want to see, what can we do to help you guys? Hey, Anthony, it's great to see you. If Anthony's the PM and I'm the asset manager. Hey, Anthony, it's great to see you. How's everything going? Like, and then now you start to see things, and you see the things that are working, and you see things that are not working. And then you could see things like, hey, how's that CapEx project looking? And then it creates a fire under your PM. So it's really important to have those things in place. But again, let's go back to the renewals. It starts from day one. You put things into place, and then you start looking in the future. Hey, Kim, it's been like, you don't tell it's 90 days, but hey, how's everything going? Hey, by chance, can you believe it? It's going to be renewal time in the near future. How are things looking for you? Why would I do that? Because I want to get ahead of it. We talked about projected occupancy. I want to make sure she says, oh yeah, we love it. We're ready. We want to renew again. Wonderful. But if Kim says, no, we're not going to renew, we're not really happy here. Hey, you know what? You flip it on them. Don't make it oh, I'm sorry to hear that. That's not great. Say, you know what? I'm glad I called you, Kim. I'm so happy I called you today. What can I do? Is there anything that I can do to assist you with this decision? And I've literally, I'm not talking figuratively, literally had people say, you know what, this stupid toilet, if you look at my work orders, I've had this thing back up 4 times. I'm like, wow, let me take a look and I'll check back with you. And then I go back and I'm like, yeah, this toilet has been an issue, whatever it is. And I'm like, you know what? If that's something, if we could fix that, would that help with your decision? Yes, absolutely. And what does that cost? And I'm going to get into that to my next topic. The cost of a toilet and have your maintenance team replace it versus what's vacancy loss, right? Vacancy loss, turnover costs, marketing costs, admin costs. The list just goes on and on and on when you could have freaking just replaced a $200 toilet, a $100 toilet for that matter. And you have your maintenance team put it in, it's a wax ring, $5-10. So if you guys aren't playing chess, you're not thinking ahead, you're just going to be reactionary, right? It's not going to benefit you. So that's another thing. So we talked about projected occupancy, we talked about renewals. Another thing that I really think it's important in today's market or in today's asset management is your budget. Talking about budget, we just talked about this in our asset management class. It's like, if you're not having hard conversations with your property management team, it's like, imagine Cindy will tell you we all have property managers who's like, oh, well, we went over budget this month. Oh, we went over budget this month. Oh, we went over budget this month. And it's like, well, that's not an option, guys. You need to review your budget. Like, imagine going to a store and you want to buy groceries and the groceries are $100, but you know you only have $60 in your bank account. Are you going to be able to run your debit card? The answer is no. It won't go through. We need to train our PMs to understand that the budget is just like that. If it says you have $100, that's all you have. You can't go over more than that. Or if it says you have $60, you can't go over more than that. They need to understand it's not like it's a blank check. The property does not have a blank check, and that cannot be stressed enough. And even though you said it one time, I could promise you're going to have to say it multiple times. Right? Imagine if we lived in a world where we told our child, hey, don't climb up there. And you told them once and they're like, oh, okay, mom, dad, that's fine. I won't climb up there anymore. That's not going to happen, right? You're going to have to constantly remind them. I'm not saying they're children, but I'm just saying as human nature, you'll say it once and then we'll be good. And then you got to say it again. You're going to be good. So make sure you instill that. It's like budget means the budget. And if it says that we have a remodel budget of 7,000 per unit, there better be a dang good reason why you need to go over. And if you do need to go over, you need to ask for permission first. It's not because I have a authority complex or because I have a Napoleon complex. It's because guess what? We've underwritten this. We've stress tested. We need to be on budget. So don't underrate it. And I think as the leadership side of things, that's where you're going to implement and be like, no, this needs to be followed. This budget, this turn budget, a turn budget means turnover. The remodel means just that. Okay. And the last thing I want to talk about is for this, like kind of like KPIs or things to look out for, is your property rating. I don't think property rating is discussed enough. And if you think about it today, just think about human nature. When you guys go to a restaurant, what's the first thing you do? You probably look for reviews, right? I go on Yelp. I just did this the other day. I go on Yelp and I'm like, hey, well, what kind of food is this? I'm looking for a good breakfast spot. Oh, well, let's go to Toast or let's go to the avocado restaurant or whatever. Your properties, if you guys are like really open-minded about your business, share with me your ratings or share with me your Yelp, share with me your Google, and we can figure out a strategic plan. You can figure out where a lot of things are going bad. Like they'll say your residents will tell you, hey, the management's horrible. They never open up the office. They take forever on your maintenance requests. Guess what, guys? They're literally giving you the blueprint on how to fix your property. They're telling you. The residents are literally telling you, hey, we're not happy with this. We're not happy with that. I get it. There's opportunists out there. And there's people that are going to tell you, oh, the rents are too high. The rents are too high. Well, my combat to that is, you know what, Kim, and if I have a private conversation, in my experience, that usually means there's a loss in perceived value. That's what you're going to tell them. I literally just gave you the blueprint. Hey, Kim, thank you for putting that Yelp review. I'm really interested to understand more about what's going on. So please tell me, there's a loss in value. You say the rents are too high. In my experience, that means there's a loss in perceived value. You don't see the value that we're raising the rents this high. What can we do to make sure you feel that value? Because the review is going to be there no matter what. You can't take it down. I've tried. Even when people use some bad foul language, I try to go to Yelp and tell them it's not available. They won't take it down. So you need to have them edit it and rechange it, and that's going to help you. So I see that we have 2 minutes left. Cindy, stop me if you want to add anything, because I'm just rolling if you want me to keep going. But am I good? Thumbs up. Okay, cool. All right. So today's market, it's that's kind of like what we talked about in the property rating. The next thing I want to talk about that try to help Trevor is, I know you had 3 evictions, 3 skips. I want to see if anything, we can watch the recording later, but what changed? What changed, whether it's a market thing, meaning market was like, okay, we bumped the rents up and now we had people, there's a reason why they either were evicted or they were skipping, right? So was they rent too aggressive? And again, maybe that's a proactive measure we could have figured out. For example, if the rents are currently at 900, but your business plan says you wanted to go to 1100, that's a $200 bump, right? Did we do enough market research to see if that market can accept it? What I mean by that is, in most companies or most underwriting, approval is 3x your rents, right? So for an example, if your rent is 900, you 3x that and you times it by 12, are they making 32,400? Yeah, they are. They're making 32,400. But if you want to bump it to 1100, that puts them in a $39,600 average income for the year. But let's say the median's only 36,000. You just outpriced your market. They're not able to get that high of rent increase. So things like that, again, thinking forward, thinking, yes, I want to make it that high of rents and the rents increases, but can the actually market support that? I can go on and on because I wrote a bunch more stuff, but I see Kim's, we're going to get out of here right now. Hopefully we were able to drop some knowledge and give you some things to think about. And it was really nice meeting everybody. So I have 15 seconds left. If you have any questions, you have 15 seconds.
Thank you. Thank you so much. I'm gonna jump out of this room just because I have to be in there when everyone gets in.
Yeah. Do we all do the same thing? We leave breakout room?
Sure. Yeah. Let's leave.